It is a fundamental principle of accounting where every financial transaction affects at least two accounts. This reflects dual aspect of concept where for every debit there is a corresponding credit. Recording financial transaction. Accounting, in its academic meaning, is the art and science of recording financial transaction of a commercial entity over a period. The double entry system used for this recording. Key term. The first stage of recording transaction. Here, each transaction is entered within detail of the accounts to be debited and credited. Then comes the ledger. The second stage involves classification these transactions into different accounts in the ledger. Then comes types of account. The account involved in the dual entry system can be of real, nominal, or future. What are the real account? Relate to physical commodity or asset like furniture, machinery, and cash. And then comes the nominal account. Represent imaginary account related to income and expense. The salary accounts, rent payment, and sales account. Debit all the expense and losses and credit all the income and gains. Then come the personal account, involve individual and institution. Example, buyers, sellers, and debtors and creditor. No, the salary account is part of the nominal account, not the personal account. Then comes the pros of the double entry system. Debit and credit. The dual entry system use debit and credit to record the twofold effect of each transaction, so it can be cross verified. Second is scientific and standardized. The DES is considered scientific and standardized, leading to less scope for forgery and easy comparison of results. Then it provide holistic information, enable management to supervise business effectively. Then it gives summary, the trial balance, a summary of all ledger balance, providing day-to-day information about profit and loss and asset and liability. Then what is the financial statement? The data recorded entry system forms the basis for preparing financial statement, such as the statement of profit or loss and statement of assets and liability, the balance sheet, which present a business financial indicator like asset, liability, profit and loss. Then what is the limitation of this double DES? While comprehensive, it can be difficult to identify error or manipulation. Also, asset and liabilities are shown at historic not reflecting their present valuation. Also, it is a pros of this system that while making it, there is a less chance of error. But if error there, then it is difficult to identify the error on manipulation. Then the key concept of account. Accounting provide validation of preparing using the double entry system. Then examination and review. Audit involves examine the fairness and the correctness and the proper organization of record. The detection of error and fraud. The key objective of auditing is to detect error and fraud that might exist in the financial record. Maintain system. However, audit may not provide complete assurance of detecting this. Independent oversight. Audit are typically done by independent person providing a external performance audit. While not directly auditing the double entry system itself, performance audit compares current performance with benchmarks, often relying on the financial data recorded. Each examine economy reduce cost, efficiency, input output, and effectiveness, relevance to object. The three, economic, efficiency, and effectiveness. Then comes the government audit. The government audit would also involve verification of receipt and expenditure recorded by government entity, which would likely to be based on double entry system. We can say the steps in the system. These are the first stage is recording or general. It is initial stage where transactions are recorded. The first step within the stage is the identification of account involved in each transaction. Every transaction affect at least two accounts. These accounts can be real, nominal, or personal in nature. Then comes the general entry is then made to record the debit and credit aspect of the transaction. For example, when furniture is bought for cash, the furniture account is real account is debited, and the cash account is real account is. Then comes similarly when goods are sold for cash or on credit, the cash account and the buyer account B account are debited and the sales account, the nominal account, is credited. Then the second is the classification or the ledger. This involves classification of the recorded transaction into the different accounts. This done by ledger. The ledger helps and summarize all the transaction related to particular account. Third is the summarization or trial balance. This involves summarizing the classified information to prepare a trial balance. And fourth one is the communication. This is the final stage where the summarized information is communicated. So we have the four stages, like the first one is general, then ledger, then trial balance, and then communication. So ledger is the key step in the double entry system. Then comes the classification of double entry system. There are two type of classification. One is the traditional classification. This classification broadly categorize accounts into account of capital and account of expenditure. And the modern classification, this classification offers a more detailed categorization: account of revenue and expenditure, account of income, and account of withdrawing or drawing. The modern classification is providing example and alternative terms. These are the key terms. So the double entry system is a fundamental accounting method for recording financial transaction by recognize their dual impact on various accounts like real, nominal, and personal through debit and credit. This systematic recording generate financial data that is used for preparing financial statement and is subject to validation through accounting auditing, which aims to ensure accuracy and detect irregularities. The resulting financial information has significantly implication for economic decision making, resource allocation, and assessing the overall financial health and performance on the entity. So